Yo, how's it going, guys? This is Chris Trades here with Full Send Traders, and today I have my simple 3-step model that will help you get funded and stay funded. If you're still new to ICT, this is the perfect model for you. I have everything from finding bias to the execution to how you should be managing the trade. Now, let's get straight into the video. The asset we're going to be focused on today is the S&P 500 futures. It moves directly with the NASDAQ. Now, this model is going to work with any asset. However, it's going to work best with the indices because they provide the most amount of liquidity and volatility. The first step in our model is going to be liquidity itself. In order for us to come up with a trade idea, we have to know where price is going to. And liquidity is the best way to be able to figure out our bias, know where price is going to on a day-to-day basis. Price is going to make these engineered highs. They could also be engineered lows, but right now we're going to be focusing on these highs. We have 3 in a row, and we could expect price to trade to those highs. Now, we have to figure out a way to develop a trading idea so that we can be able to take a trade targeting those highs. Going to our next step, we're going to be figuring out our delivery. Now, using the higher time frames such as the daily, 4-hour, 1-hour, 30-minute, and 15-minute, we could find a fair value gap. Right here, we're specifically looking at the 4-hour. You could see that we're respecting fair value gaps down here, and because it's the higher time frame, we're not necessarily going to take a trade off of here, but this shows us where price is respecting and also an opportunity for us to go long when we're on the lower time frame. Over to our next step, you could see this is again the 4-hour. When we zoom in, we could figure out where we can execute using the 5-minute, 3-minute, 2-minute, 1-minute, all those time frames. We're able to find a fair value gap, enter on it, and target that liquidity that we're looking at from the start. Again, zooming in, we have a fair value gap. Price trades down into it. We see that we're respecting it. We create a fair value gap. Now, this gives us an opportunity to execute. Going over to our trade, which this was in fact a trade that we took, you could see, and let me go over to the higher time frame. So initially, we come down and we take out this liquidity. Now, what happens if we're looking at the chart and the chart looks like this and we don't know where price is going, right? Because we have lows down here and then we also have highs up here. So how do we know where price is going? This is where discipline comes into place. If you don't know where price is going, you simply don't enter. You don't look for a trade and there might not be a trading opportunity. But because we came down and we took out this sell side liquidity, we now know that we could target this buy side liquidity. So that's the first step in our model, is figuring out where price is delivering to, where that liquidity is at. Coming up, let's continue. You could see that we create a 15-minute fair value gap right here. Now, as price trades down into it, that's going to serve as our delivery, which is our second step. We have to find a higher time frame fair value gap to key off of. And you can see that price is immediately respecting it, going down to the lower time frame, and I actually missed the area where we were going to enter. So right here we have our fair value gap. Price trades down into it, immediately respects it. We're able to get long, stop below the fair value gap right here, and then again we have all these beautiful highs to target. We have a total of 5 highs including this session high, so it's very obvious where price is moving to. And this is where you should be at as a starter. It's okay to not know where price is going, but as soon as you see price developing like this, you're going to know, okay, this is where price is going to deliver to. And whenever you have a trade like this, just go for it. Okay, this ends up being a win. Coming over to my Telegram, this was the exact trade that we took on live. So you could see we went long one position right here, long another position right here, and we exited all of it at the top. What a beautiful trade. We also had another trade this day, which I can also cover right now. Again, 3 steps. Figure out where price is delivering to, which is our liquidity. We're going to have a 15-minute fair value gap that price is respecting, delivering off of. And then we simply find a fair value gap as our execution. Now going over to NASDAQ. The same day that we're looking at has an opportunity. So right here, pre-market, I'm looking at where are we most likely headed to on NASDAQ. We have these highs. Price swept out this low. So we have no reason to trade lower. We also have Asia high up here. Now going over to the 5 minutes, we have this delivery. And then coming down into here, we have another long opportunity. And because price was respecting down here, we know that we're allowed to get long up here. And that would be a 1 to 3 RR trade. Fair value gap is written out right here. Perfect. So again, we figured out our target, which was this high, which just so happens to be a data high. We have a delivery from the 5 minute fair value gap, and then we have our execution up here. 3-step model, super simple. If you guys aren't understanding the inversion fair value gap, this might be a better option for you. Overall, I still take this trade to this day. I take both inversions, this normal fair value gap, because they simply work. You create the bias, you figure out where price is drawing to, you have your delivery, and then you simply execute. If you guys found value in this video, make sure you hit the like and subscribe button. I will have my Telegram linked down in the description below. If you guys want to see all of my trades, keep up to date with all of my analysis, it will all be there. I'll catch you guys in the next one. Peace.